Ever feel like your money is just floating? Like it's adrift in a sea of financial uncertainty? You put it in a bank, hoping it's safe, hoping it's growing, but there's always that nagging question, is this the strongest place it could be? We hear about banks all the time, big names, flashy ads, promises of security. But what actually makes a bank strong? Is it just the size of their logo? The number of branches? Or is there something deeper, something more fundamental at play? Today, we're diving into a question that's probably crossed your mind, especially if you're keeping up with financial news. Which bank is stronger than Roger Bank? Now, before we jump into the comparisons, let's understand why this question even matters. We live in a world where financial stability is more crucial than ever. Inflation, economic downturns, market volatility, these are the realities we face. And in the middle of it all, your bank is supposed to be your rock, your anchor. It's where you trust your hard-earned money to be safe and sound. So, when we ask which bank is stronger than Roger Bank, we're not just talking about a simple ranking. We're talking about the fundamental principles of financial strength. We're talking about the factors that make a bank resilient, reliable, and ultimately, trustworthy. Let's start with Roger Bank. What do we know about them? Pause for dramatic effect. Are they a regional powerhouse? A global giant? Perhaps a specialized niche player? Whatever their positioning, we need to understand their core metrics. First, let's look at capital adequacy. This is essentially the bank's cushion, the amount of money it has in reserve to absorb potential losses. A bank with a high capital adequacy ratio is like a ship with a strong hull. It can weather storms without sinking. Regulatory bodies set minimum requirements for this ratio, and exceeding those requirements is a good sign of financial strength. Next, we need to examine asset quality. What kind of loans does Roger Bank issue? Are they high risk or low risk? What's their non-performing loan ratio? A bank with a portfolio of high-quality assets is less likely to experience defaults and losses. Then, there's profitability. Is Roger Bank consistently generating profits? Are their profit margins healthy? A profitable bank is more likely to reinvest in its operations, strengthen its capital base, and weather economic downturns. We should be looking at their return on equity, ROE, and return on assets, ROA, to get a clear picture of their financial performance. And finally, we need to consider liquidity. How easily can Roger Bank access cash to meet its obligations? A bank with ample liquidity is less likely to face a run on deposits or other funding challenges. We should be looking at their liquidity coverage ratio, LCR, and net stable funding ratio, NSFR. Now, let's take these metrics and apply them to other potential contenders. We need to identify banks that outperform Roger Bank in these key areas. Let's consider a hypothetical scenario. Imagine Roger Bank is a mid-sized regional bank with a solid customer base. They have a decent capital adequacy ratio, but their asset quality is somewhat mixed, with a slightly higher than average non-performing loan ratio. Their profitability is stable, but not exceptional, and their liquidity is adequate. Now, let's compare them to a large national bank. Let's call it Apex National. Apex National has a significantly higher capital adequacy ratio, exceeding regulatory requirements by a substantial margin. Their asset quality is excellent, with a very low non-performing loan ratio. They have consistently high profitability, driven by a diversified portfolio and efficient operations. And their liquidity is robust, thanks to a large deposit base and access to various funding sources. Based on these metrics, Apex National appears to be stronger than Roger Bank. Their higher capital adequacy, superior asset quality, strong profitability, and robust liquidity all point to a more resilient and stable financial institution. But what about a specialized investment bank? Let's call it Global Capital Partners. Global Capital Partners focuses on high-net-worth individuals and institutional clients, offering specialized financial services. Their capital adequacy is high, but their asset quality is more complex, with a mix of high-risk and high-reward investments. Their profitability can be volatile, but when they perform well, they generate substantial returns. Their liquidity is managed carefully, with a focus on short-term funding and liquid assets. In this case, it's not as simple. Global capital partners might have a higher risk profile than Roger Bank, but their potential for higher returns and their specialized expertise could make them a stronger choice for certain investors. It depends on your risk tolerance and financial goals. We also need to consider factors beyond the numbers. Things like regulatory oversight, technological innovation, and customer satisfaction can also play a significant role in a bank's overall strength. For example, a bank with a strong compliance record and a proactive approach to risk management is less likely to face regulatory penalties or financial scandals. A bank that invests in cutting-edge technology can offer its customers a more seamless and efficient banking experience. And a bank with high customer satisfaction is more likely to retain its customers and attract new ones. Let's say a smaller, tech-focused bank, Innovate Bank, consistently receives high customer satisfaction scores and is known for its user-friendly mobile app and innovative financial products. While they might not have the same scale as Roger Bank, their strong customer base and technological edge could give them a competitive advantage. Another factor to consider is the geopolitical landscape. A bank's exposure to international markets and its ability to navigate geopolitical risks can significantly impact its financial stability. A bank with a diversified international presence and a strong understanding of global markets is better positioned to weather economic and political shocks. Let's say Global Reserve Bank has a large international footprint and a strong track record of managing geopolitical risks. They have a diversified portfolio of assets and a deep understanding of global markets. Their ability to navigate international complexities could make them a stronger player than Roger Bank in the long run. Ultimately, determining which bank is stronger than Roger Bank requires a comprehensive analysis of various factors. It's not just about looking at the numbers, but also about understanding the bank's business model, its risk management practices, its technological capabilities, and its overall strategic positioning. It's about understanding the environment that each bank operates within. Are they in a stable industry? Are they facing significant regulatory changes? Are they adapting to the changing needs of their customers? The answer to which bank is stronger than Roger Bank is not a simple one. It depends on a variety of factors, and it ultimately depends on your own individual needs and priorities. We've looked at capital adequacy, asset quality, profitability, liquidity, technological innovation, customer satisfaction, and geopolitical risks. All of these contribute to the overall strength of a bank. With that said, thanks for watching, and until next time.